Hello everyone. Welcome to Financial Battery channel. First, a quick introduction about me. I'm not an expert investor. However, learning about the individual companies, evaluating stocks, and trading stocks has been my biggest hobby for the past 2 years. In this channel, I plan to talk about my investing strategies, my portfolio, my performance, what worked, what failed, and what I plan to buy next. If you like this content, please hit the subscribe button and hit the like button. Thanks. My portfolio on M1 uses this strategy that I call dividend growth. Dividend is the main engine of this portfolio. So, what is a dividend? A dividend is a distribution of some of a company's earnings to a class of its shareholders. Typically, dividends are paid out as cash either every quarter or every month. There is one thing in common across all of the companies that I hold. They all pay out dividends. I love dividends. What is not to like here? Let me explain. It is cash. It is free cash. Who doesn't like cash? Who doesn't like getting paid every quarter or every month? I'm getting paid without doing anything other than just buying and holding these companies that I like. Instead of spending this cash, the main goal of this portfolio is to reinvest that right back into my portfolio. Reinvesting dividends supercharge my portfolio growth. This phenomenon is called compound growth. And I can show you this using the calculator. Hey guys, using this calculator, let me try to demonstrate the power of compound growth. Let's think about this scenario. Let's say that initially we have about $10,000 to invest. In addition, let's say that we can invest about $1,000 every month. We're going to choose 7% as the rate of return, which should be a modest rate of return based on historical performance of S&P 500. And let's say that our investing horizon is at about 10 years from today. Based on that, let's take a look at the results. Now, as you can see here, your initial contribution is $130,000. This is with $1,000 invested every month for the next 10 years. It is represented as blue portion of this graph, and as you can see, it's a linear graph. And then your compounded returns is at about $60,000, which is a little bit less than half of your initial contributions, for a total value of investment at about $190,000. So your compounded returns is represented as a green portion of this graph, and then as you can see here, it starts as very small, but as years go by, it grows bigger and bigger and bigger. Now, if time to grow, let's say we change this to about 20 years from today, then you can really start to see the power of this compounding. So your initial contribution at this point is about $250,000. Now, if you take a look at compounded returns, it's almost $300,000, which is greater than your own initial contributions, for a total value of investment to be at about $500, a little over $500,000. As you can see in this graph, the green portion of your compounded returns is growing bigger and bigger and bigger. And let's say your time to grow is at about 30 years, then you can really start to see the power of this compound. Now, as you can see here, your compounded returns is more than double of your initial contributions, and your total value of the investment will be over $1 million, and most of it is based off of your compounded returns. This is the power of compound growth. Now, you may ask, how does dividends play a role here? And I can tell you, it plays a key role. If you look at these additional contributions, we we committed to putting $1,000 of our own money out of pocket. Now, what if we can reinvest dividends right back into this portfolio? Whatever that dividend amount is going to be part of this additional contributions. So in my case, I get about $500 of dividends every month. So in that case, instead of $1,000 out of a pocket, I can put in $500 of my own money plus $500 of the dividends to come up to this $1,000 contributions amount. In essence, it makes it easier for me to be able to do this $1,000 contribution. In another case, let's say I can still put in $1,000 out of pocket, plus I will reinvest $500 of dividends on top of that for a total of $1,500 instead of $1,000. So if we recalculate that amount, the new result will show that the total value of investment now is at $1.8 million, which is an increase of about $600,000 just based off of you reinvesting your dividends. There are other reasons of why dividends are so good. It's a great strategy for long-term investors. I'm looking to invest at a minimum of 5 years. My investing horizon is about 10 to 20 years. Given that, I am looking to put in a lot of money into companies that I can trust that they will survive the downturns like we experienced early last year, and hopefully they can continue to grow, and pay out their dividends. These companies that can pay out their dividends are much less risky than some of the smaller companies. Dividends can become a stable source of passive income. Paying dividends signal that companies are doing well financially and they have generated good profits to share with their shareholders. So let me talk about my strategy that I named Dividend Growth. Why am I calling this strategy Dividend Growth? Are for these reasons. I'm focusing on companies that can grow their dividends annually. Some of these companies have low starting yields, maybe even less than 1% or less than 2%. However, I believe that they will continue to raise their dividends over time. I'm also looking for companies that can give me stock price appreciation. I'm not just satisfied with receiving dividends from these companies as a whole. I want them to grow their business and their stock price to reflect their growth. My target growth will be 15% annually. I believe that if I can pick and choose the right type of companies, then it will lead me to a road to financial freedom. That will be my ultimate goal here. Thanks for watching the video all the way through. If you like this kind of content, please hit the subscribe button and leave me some comments. In the next episode, I'd like to walk you through my M1 portfolio and show you my dividend stocks. Until then, take care.